Now, ladies and gentlemen, do not leave anywhere because our next session is now round the clock. And it's a very exciting presentation session. I want all of you to enjoy this session because post this session, we will take the break for the lunch and the networking. So please do not leave the hall and do enjoy this next session coming up on leveraging corporate bonds portfolio by NBFCs for funding requirement. And for that, I would like to call on stage with a big round of applause, Mr. Kashinath Katakdhond, Managing Director, AMC REPO Clearing. A big round of applause to Kashinath ji. Welcome to the stage, sir, and looking forward to a great session from you.
Good afternoon, everyone. My name is Kashinath Katakdhond, Managing Director with AMC REPO Clearing Limited. This entire conference is about NBFCs, right? However, if you look at it, what are the NBFCs? NBFCs are parallel to the banking system. They are regulated. They work in a regulated environment. They are regulated by RBI. If you look at it so NBFCs primarily borrow funds from the market or from the CP, CDs or CPs, and then they can also borrow money from PE funds, raise money from there. However, the cost of funding is getting more expensive, right? Funding is becoming a constraint, and if funding is a constraint, it can lead to slower growth for the NBFCs. So what we are trying to present today is an alternate mechanism for the NBFCs to raise funds in a very cost-effective manner. And what is it that we are going to talk about it? So AMC REPO Clearing Limited is a limited purpose clearing corporation. We are regulated by SEBI under the Securities Stock Exchanges and Clearing Corporation Regulations 2018. We are also regulated by Reserve Bank of India under the Payment and Settlement Systems Act of 2007, and we are also authorized by RBI to act as a tri-party repo agent. Okay. And we are promoted by all the mutual funds. So we are an independent company promoted by all the mutual funds. Initially, 40 mutual funds contributed 150 crores of share capital to the company. And after the consolidation of the mutual funds, around 37 mutual funds are the shareholders of the company. Okay, so this has been the progress. We were set up in 2021. So far, we have seen good progress. We got approval from SEBI to launch tri-party repo product in 2021. In Jan, we got SEBI approval to act as a limited purpose clearing corporation. RBI gave us approval in 23. In July 23, Finance Minister Nirmala Sitharaman, she launched this particular product along with another corporate debt market development fund. So far we have done we have done more than 18,000 crores. Last month we crossed 20,000 crores monthly volume, and we are also doing some term repos also. So primarily if you look at it repo is a money market instrument. Primarily 99% of the transactions happen on the overnight market. However, we are seeing some transactions with a 7-day tenor as well. So which is a good progress. Now what does a repo mean? A repo means if I am holding a corporate bond portfolio, I am the holder, and once I invest that, and I can actually use that corporate bond portfolio to borrow the money for a short-term basis, typically for less than 1 year, right? So the borrower he will give the security to the tri-party repo agent, which is the AMC repo. Okay, they will the lender will give the money to the clearing corporation, and once we get the money and the securities, we will give back the funds to the borrower. Typically, these transactions happen on an overnight basis. So here we are acting as a tri-party repo agent, and under that we act in the fiduciary capacity. The borrower, before borrowing, has to transfer the collateral from his NSDL demat account into our account, and against that he can borrow a limit. Because the corporate bonds are issued by the corporates or the PSUs and the banks and the NBFCs, housing finance companies, there is a haircut depending on the rating of that particular bond, the category of the issuer, and the maturity of that particular bond. Whether the bond is having a 5-year maturity or 10-year maturity bucket, depending on that, there is a haircut that is applied, and based on that they get a limit. Say suppose somebody gives a limit bonds worth 120 crores. Against that he may get assuming having 20% haircut, he will get a limit of 100 crores, against which he can actually come and borrow on the market. So we provide a screen-based anonymous. So the borrower doesn't know who the lender is. The lender doesn't know who the borrower is. We are the counterparty to each and every transaction. For the borrower, we are the counterparty. For the lender, we are the counterparty. And we provide settlement guarantee. So we ensure that irrespective of whether the lender is able to pay the money or the borrower is able to repay the money, we stand the guarantee and we provide the money and we ensure that the settlement happens on a timely basis. Multilateral net settlement. So if there are multiple transactions which are happening throughout the day, we do a net. There is no gross movement of funds. So a T+0 transaction, which is netted with the T+1 transaction for yesterday, and along with that the ready forward leg transaction for yesterday is also getting netted out, and you pay only the net. So there is a netting that happens. Sometimes the netting happens to the extent of 80 to 90%. So the gross movement of funds between the parties is very minimal. So if you look at the contract, it's a basket repo. So what does it mean? So we create a separate basket. We have a PSU, for example, there is a bonds which are issued by PSU, banks and financial institutions having a AAA rating. All these bonds are clubbed under that basket called PBFSI and a AAA basket. So under that, if you give a collateral under that, you will be able to borrow money in that particular basket. So you can participate in a specific basket depending on that. So you can participate in NBFC housing finance basket, or with a AAA rated or a AA rated, or similarly for the corporates also there is a separate baskets which are there. And if you look at it, so it's a discounted instrument similar to the CCL TREPS market. The ARCL corporate bond repo is also a discounted instrument. The tenor varies from 1 to 365 days. RBI has permitted us to launch product up to 365 days. However, given the issuer risk associated with the corporate bonds, we have restricted the tenor to 7 days. So somebody can borrow for 1 day to 7 day max as of now. Depending on the market need, we can extend that to tenor to 14 day, 15 day, or a month or 45 day. Okay. The interest, it's of the minimum quantity size is 250 crores. So one order you can put for 250 crores, where the transaction charges gets reduced for you. It's a typical lend and borrow. So the settlement cycles is between trading happens from 9 to 1, pay-in happens at around 2 to 15 p.m. and payout is done by 3 p.m. So if the borrower transfers the collateral, say corporate bonds, in the morning at 9, okay, the market starts at 9, he transfers the collateral at 9, the transaction happens by 9:30, 10, the market gets over. There are lenders, borrowers, we are doing more than 1,000 crores volume on daily basis. So what happens is he is transferring the collateral at 9 a.m. The transaction happens say at 9:30, by 2:15. The lender makes the payment to us. By 2:15 or 2:30, as soon as the payment is received, there is a payout that happens to the lender. So he is able to get the money on the T+0. He is able to take that money, go to the market, buy another bonds, or participate and take care of that. Or they can use it for their whatever the funding needs are there for him. One thing that we can tell you is that there is the assured liquidity for all the participants. So if you, because this market is overnight market, the main concern comes where will the order be rolled over next day. That means I don't have to come and borrow, or I have to repay again, right? That uncertainty is there. So what there is enough mutual funds and the lender, primary lenders in this particular market. So if you look at the SIP growth that we have seen recently, they have to deploy the money that every day that they receive through SIP collections, they have to deploy in the overnight market. So we have assured liquidity because the company is promoted by all the mutual funds. All the mutual funds are coming and participating as lenders in this particular market. We have banks, we have mutual funds, we have primary dealers, we have stockbrokers, we have merchant bankers, we have NBFCs, corporates who are all coming and participating in this particular market. So the key benefits is it helps you raise liquidity against your corporate bond portfolio. This is another mechanism. For example, you invest in say 7.5% or 7.75% bond. you are able to get coupon on a periodic basis, right? So your investment is earning interest on that. Not only that, but also you can give that corporate bond as a collateral for your borrowing. Now you are able to borrow. For example, if the NBFC is able to borrow, say from the banks at say 11 or 12%, right? Say 10% or 11%. Whereas in this particular market, you are able to borrow in the overnight market at around 6.75 or 7%, including your brokerage and other things. It's around 7%. So that's a big saving for you. Even if it is 100 crores or 200 crores or whatever is your limit, you are able to borrow at a much competitive rates as compared to what you are able to get from the banks. That is another advantage for you. This is an alternate market for you to come and borrow funds in a short-term basis and use it for your requirements. Why would NBFC touch a working capital line when I can actually come and borrow at a much lower rate using the repo rate? If the CCL under the where the market happens, the government repo happens around 6.75, over here you will get somewhere around 7%, because there is a issuer risk. Government securities are risk free, whereas the corporate bonds are carry the issuer risk, the market risk and the liquidity risk. So because of that, there is a little bit higher basis point, but you are still able to get much lower than what you are getting. Not only that, but also you are getting the coupon on the bonds. So it's not that you are able to borrow, you're bringing down the your borrowing cost, but also you are able to earn your interest on the bonds that you are invested. So there is a positive carry that happens by investing in bond and utilizing that for borrowing against those bonds in the market. It helps you manage your short-term liquidity, whether it's overnight or 7-day repos are happening, and we have seen a good market. The primary objective of setting up AMC REPO Clearing Limited by government and by regulators, and this in fact is a SEBI initiative, is for the development of the corporate bond market in India. Today we are allowed to do only tri-party repo in corporate bonds. However, our mandate is going forward to develop the corporate bond market in India. And for that, we are taking all the steps necessary, working with the regulators, both SEBI and RBI. The other benefit is that we have created something called a core settlement guarantee fund. So we provide settlement guarantee. So in case the borrower is able to is defaults, or the lender is not able to make the payment, however we have to ensure that the settlement goes smoothly. So what we have done is every issuer who is eligible to issue the bonds, he is required to contribute half a basis points of the issuance amount over the life of the bond towards the core settlement guarantee fund. This circular has been issued by SEBI. It is effective, and as of now the core settlement guarantee fund corpus is somewhere around 250 crores. So that is how we are able to give guarantee settlement for every transaction that happens on the platform. So this is where you are able to trade. So for example, this is a screenshot that happened I think just on August 27th recently. So if you look at it, the best bid the trades which are happened is around 6.58 when the market was around 6.3. So what you are able to see is between 10 to 15 basis points higher, you are able to borrow money from the market. Okay, and this market has mutual funds who provide most liquidity, because they cannot borrow in this market, but they can only lend in this particular market. They can borrow to the extent of their 20% of their redemption requirements. However, they are primarily lenders in this particular market. And we have 37 mutual funds who are the shareholders of this particular company, promoted by them. So if you look at it, it's a very competitive rates that you are getting. These are live transactions. So you don't know, this is happening live on the market, on the NSE trading platform. There is a tri-party repo market. The buyer and the lender, they both come. They don't know each other. We provide the settlement guarantee. So it's when you do bilateral transactions, your counterparty risk comes into, your credit rating comes into play, your sectoral limits come into play. However, when you do tri-party repo, we are the counterparty. So all those limits go away, all those restrictions go away. Okay, so we also report this on the CCL FTrack platform. RBI has told us to mandated to report all the corporate bond repo in the CB. There is a CB repo under that you will see. Earlier, there were many OTC repo transactions that were happening on regular basis. But after the launch of the AMC repo, we are seeing like, the OTC repo market has gone down. However, the exchange traded ARCL tri-party repo market has picked up. So these are the live, examples. So here is the volume, that has seen. We started in July 23. We did 12 transactions, 480 crores. Today, last month, we did 20,000 crores. And the number of trades has crossed 200 plus. So we are seeing a good traction. More volume will happen as we grow. More mutual funds are coming, more lenders are coming, more banks are coming, more corporates are coming actually. If you name the largest corporates today, in India, they are part of the system. Okay. So this is what it is, the borrower and the lender. The borrower will transfer the collateral to AMC repo. We are the tri-party repo agent. We act in the fiduciary capacity. We manage the collateral on behalf of the borrower and on behalf of the lender. We specify the list of eligible securities. We don't accept all the bonds, right? We are accepting bonds which are rated between AAA, AA plus and AA. Below that, no bonds are accepted as eligible collateral because there is a issue or risk which is associated with the corporate bonds. Okay. We complete the forward leg collateral with till the time the transaction is closed. The borrower repays that money. The collateral is is with us. Only when the transaction is closed out and the borrower requests for collateral release, we will release the collateral. And the max time that a borrower can give the collateral and immediately request for the collateral is maybe half an hour, 1 hour, not more than that. And in case there are corporate actions, because if you look at corporate bonds, right, there is a TDS component which is there. Now you have to pay, whenever there is a coupon payment by the issuer, there is a TDS. Now if we continue to hold the bonds during the corporate action, then we will get we will have to pay the TDS and we can't transfer the TDS. So what we do is we tell the borrower to replace the collateral with some other security, so that the bond lies with the borrower, he will get the coupon and he will pay the TDS rather than we making. So there is a shut period that we use for managing the collateral substitution. Similarly, the lender, he has to pay 0.5% of the lending amount. For example, if he's lending 100 crores, he has to pay 50 lakhs as the initial margin for lending in this particular market. He can release a request for the margin release when the payout happens at around 3 p.m. So all the eligible issuers list is available on the website. The instruments which are eligible for us, they are available on the website. We take plain vanilla bonds, and from Monday onwards we are going to accept commercial paper and CPCD subordinate tier 2 bonds, and very soon we are going to launch the tri-party repo with debt ETF as the eligible collateral. That is coming soon. These are the new baskets, less than 5 years 7.5%, and to the max for the greater than 10 years is 15%. The lower the rated, higher is the haircut that is applicable. So if somebody gives me 100 crores or 100 rupees, we'll apply, and if the bond is rated AA, we will give a limit of 75 rupees only. That is a protection cushion, because in case the borrower defaults, I need to go to the market to sell the collateral and make sure that the payment, the receipt that I receive is used to make the payment to the lender. Because I am giving a settlement guarantee, so I need to ensure that the collateral is enough, there is enough buffer, and the remaining portion will be returned back to the borrower. So settlement is the borrower has to transfer the collateral before borrowing. Settlement is only the fund settlement. There is no exchange of the collateral between the borrower and the lender. We hold the collateral as in the fiduciary capacity as a tri-party repo agent governed by RBI guidelines. Okay. The net obligation, as I said, we do the netting across multiple days. So it's same day settlement, T plus 0 settlement. Today's transactions are netted with yesterday's T plus 1 and forward leg of T plus 0. So all the transactions are netted. So the fund flow between the parties is minimized. The gross movement of the fund is minimized. We do netting and novation. That is the benefit that gets for using efficient use of the capital. We are providing a rollover mechanism. That means when I do a borrow or when I do a lend, I can roll over the transaction. That means I don't need to give a fresh collateral. If I borrowed say 100 crores yesterday, I can put a rollover order and I can roll over the transaction. I will use the same collateral. Similarly, the lender has the ability to roll over the transactions. So even both sides, like he doesn't need to give a fresh initial margin when he's doing a rollover. So that is the benefit of coming and participating in this particular market. Lend position, intraday collateral and margin addition and release. So you can make a release additions on both sides for the lender and the borrower on an intraday basis. Addition of collateral of any new bond gets issued in the say there is a new primary issuance that happens in the bond, and that bond it takes at least a day or T+1 T+2 where the bond gets added to the platform, and based on that you can use that as a collateral for the borrowing. So this is the overall process flow: transfer of collateral. Similarly, the lender will transfer the cash margin. Then it comes to ARCL. We manage the collateral and the fund margin. The trading happens on the NSE trading platform. NSE is a service provider for us. We are a market infrastructure institution under SEBI and RBI guidelines. We do the clearing and settlement. We are the legal entity for the as a counterparty for each and every transaction. We provide settlement guarantee. So no matter whether the lender pays the money or not, we ensure that we will make the payment to the borrower, and the borrower in the second leg has to repay. If the borrower defaults, we will make sure that the lender is paid on behalf. Okay, so we do order level haircut management or order level risk management. That is, before a borrower enters the order, it will check whether the collateral is there, whether the limit is there. Suppose he has given 100 crores of bonds. Out of that he has utilized 75 crores. He cannot borrow more than 25 crores, the remaining amount of 25 crores. If he puts 26 crores also, his order will get rejected. So we do at the order level itself the risk management. Higher haircuts is there because we carry the issuer risk, the underlying rating risk and other things. The eligibility criteria has been defined. We take certain eligible issuers only based on financial criteria. Based on non-financial criteria, we add issuers. This list gets added on a periodic basis. The borrower, for example, there is a corporate which has issued a bond. He cannot give his own bonds and use that as a collateral for borrowing, because that's a wrong way risk. He has to give the bonds which are part of his investment portfolio to prevent wrong way risk. So that check is done before the collateral, the borrower gives that collateral. At that point in time, we do that validations and checks. So today, as I said earlier, the core settlement guarantee fund is somewhere around 250 crores. We provide and we do daily mark to market of the transactions. Member participant limits, it's based on the category, net worth and credit. NBFCs, any NBFC which is having more than 100 crores, a positive net worth, they can come and participate, profit making as per the latest available financial statements. Similarly, the trade happens through a broker, through NSE. Trading is done by the KYC is done by the broker, and the participant NBFC get registered as a participant. There is no role of the broker except to give you user ID and password to the screen. The collateral movement and the fund movement is directly between the NBFC and the clearing corporation. So there is no role for the broker to come and say. So this is what we require. You require an NSDL Demat account. Most of the NBFCs will have that. There is a FTRAC logging that is required because we have to report that on the FTRAC platform, and KYC documentation. These are the charges, 15 rupees per crore, maximum 1500 per trade. The charges are very similar to the CCL TREPS market. the repo that happens in the government securities. The charges are exactly similar. Effective rate. So this is where, like, if you're able to, like, say use CPCD for your, like, borrowing, right? The cost will come somewhere around 7.5, 7.28, 7.83 and others, right? Whereas you are able to, like, as I said earlier, say 6.957, 6.75 is the rate at GSEC market, around 15 or 20 basis points higher than that. You are able to actually borrow much slower. So if you compare, like, 30-day, 90-day, or, like, say CP, if you issue for 90-day typically, right? So you'll be able to, like, get much lower, like, funding at a much lower rate. So that's it from my side. Any questions? More than happy to take it. Yeah. Sure. Thank you.
Ladies and gentlemen, a big round of applause to Mr. Kashinath Katakdhond, Managing Director from AMC Repo Clearing, for that wonderful presentation on leveraging corporate bonds portfolio by NBFCs for funding requirement. And thank you so much, Kashinath ji, for doing the wonderful presentation here. The entire team of AMC Repo, including Kashinath ji, is available for both the days. So please reach out to them to learn more about their products and offerings during your networking sessions. I would now like to call on stage Dr. 𝑰𝒏𝒅𝒊𝒂 Joshi from PayMe India to kindly do the honors of felicitating our honorable speaker here. Thank you, 𝑰𝒏𝒅𝒊𝒂 ji. A big round of applause once again, ladies and gentlemen. That was Mr. Kashinath Katakdhond, Managing Director from AMC Repo Clearing, for that wonderful presentation session. Thank you so much, Kashinath ji, and thank you so much, Dr. 𝑰𝒏𝒅𝒊𝒂, for doing the honors.